Good morning, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for March 23rd, 2023. Remember, trading futures involves risk and is not suitable for all investors. Everything I talk about here today is just my own opinion and not a direct trade recommendation. Was asked by customer or client and others on the internet. I've seen a lot of questions floating around about the oilseed complex lately. It's been a pretty big mover in the markets, and I think there's a lot to talk about here. And certainly later today, during my Strategy of the Week webinar, which I hold every day at 1:30 p.m. Central, you can find the sign-up links in the information and comment section of this video. Join me later today while I'll go over all of these ideas and more in the marketplace. But the oilseed complex and certainly the biofuel mandates that they represent in the commodity markets, or the demand for in those biofuel mandates, I should say, is reflective of some other macros right now. So we're going to get into canola, soy oil, and palm oil here in a minute. But one of the big macros that all three of those are following, and I think a big reason why we've seen, I don't want to call it a depression, but certainly a bear cycle in the oilseed complex, is because energy products like crude oil, right, have been down. And we found our low of $64.36 here just a few days ago, pressing down into the October of 2020 through October of 2022 time frame, where we made a crescending tops. We held higher highs and higher lows as the market built up speed for that final push in 2023 or 2022 into 2023 for that big inflationary push with the rest of the market. We then unwound as the U.S. started to sell oil stockpiles. The Russian-Ukrainian crisis kind of continued on, became less headline driving, and we pulled back from a 130 high in crude all the way back to basically 50%, right? From you mark from the COVID $6.50 low, call it $0 at that point. Heck, front month deliverable crude futures were negative. That doesn't mean crude itself was negative, like the spot price, but deliverable crude was, because there's no new place to put it. You had a pullback into 50%, into that 68, 64 territory. This old broken resistance, now a support. So big daily, weekly, and monthly time frame, I would say, right, pullback of a trend. Very choppy, very certainly one directional, but very choppy and overlapping on the way down. Certainly heading south in some kind of channel. The last 50% short we identified was from a 93.74 down to the 69.97 lows. That 81, 85, 82 figure held as resistance. We came down. 64.36 was the downside targets. So now there's a next in the series for algorithmic short sellers here on the daily chart. They're going to be looking at that 82 swing, entry high to target low. 73.50 is the next area of resistance. I mean, that aligns with this old supportive area on the chart. So okay, there's clearly an area for the last several months we were held up above that 72 figure that we broke below, and now we're coming back up to test it as resistance. Big test of resistance. If we break back above 75, that could be a break of other downward sloping trend lines against the highs, as well as a break of the 618 line of that next in the series, swing from high to low, which means the two steps down, one step up pattern might be breaking. You might be breaking back above highs of the previous months at 80, and we'd be thinking about a bigger reversal in crude. It hasn't happened yet, but we know what to look for and where some action points in the market are for key signals and some of the other things we want to trade or be part of. So oil, maybe finding some kind of low here, capitulating down into a big supportive area. We see a multi-day reversal ensuing. Can the daily and the weekly charts flip back to being bullish? We have some levels above. 76 is one of them, in my opinion. Got to get back above 74. Got to then break 76 to 78, and certainly then 82, or that 80 to 82 area, that cluster of highs that we had there. That would flip the book for me, so to speak, on crude. I think we'd be going back to 100 and above, and that would be very beneficial to our oil seeds as well. Something to look for because of this biofuel. Anything attached to biofuel, right? If crude's down, it's not gonna help it out. certainly we have, a dump fest going on in outright soybeans, right? I don't think that the drop in soybean prices though is the reason meal and soy oil prices are dropping. I think that the prices in meal and oil are leading the beans here. I actually think beans held up very well. And then, as the outputs from crush need to go down, the inputs also have to come down as demand will wane. But we broke, below the 200-day moving average of 1460 there, below our upward sloping trend lines. There is this inflection zone that, of resistance at 1470, 1490. We were breaking above. We were kind of holding out support. Now we're back below that area. So we're back into this old trading range, which opens the door for 1400, 1350 to 1360 to fill that old gap. Even the old lows down at $13. None of that's out of the realm of reality here. I mean, if this market continues lower, it's going to continue lower with velocity. And it's a falling knife, right? So that doesn't help out soy oil from a sense that actual beans are starting to fall. But the discussion in this market actually really began with canola, which arguably today is actually having a great day, up 1% at 727. You can't argue that that's a good little, start to maybe a reversal to what has otherwise been a very one-directional trend. Like any green candle over the last 2 months for canola breaks the trend entirely, because every single day except for one has been a red candle in the last almost 30 days of price action. And then you also consider that almost every single one of these candles has been, with the exception of about two, have been lower lows and lower highs. You have two discernible, right, statistical things to look at to define this trend just from that. One is you need to see the daily candle continue to make lower lows and lower highs. The second it doesn't, you could be breaking the trend that began from 820 and lower. Also, green candle, a good reason for that. Coming out of oversold for daily RSI would be another good reason and certain signal. So I think we're getting close, and maybe today into tomorrow is the day that canola flips. I'm not saying this is the lowest low we're going to see, ever on this chart for May. But I do think it's time. It's time for the market to have a short covering rally, right? We are so far away from all of our moving averages. We're way oversold. It won't take much to see this market head back towards, the 18-day moving average, maybe the 55-day, and certainly back towards this supportive area on the chart, right? If we go back and we look at that crude chart for a second, basically all of 2023 so far, we held some kind of supportive low. Well, the same thing was happening and going on in canola. In fact, the same thing was happening if we go and we look at, soy oil. We had a similar kind of low forming there around the 57 area. And then when we go and we look at palm oil futures too, we had a very, very, very similar, if not the exact same type of supportive area forming there around, 3,800 that we're now starting to break below as well. So this is a futures market that we don't oftentimes, take enough of a look at. A main reason is because, hey, when I flip over, when I look at a non-continuous, of course now the chart's looking right. Earlier it was showing a big daily candle up to 3,900. We oftentimes have weird price feeds for palm oil, but when it does work, it works beautifully. And look, we can see how similar this palm oil chart looks to, well, maybe not so much to canola, but when you take a step back, how it's the most bullish or holding up the best out of our, three oil seeds, our veg oils, not oil seeds, but veg oil markets right now. So that demand, I think, for Malaysian palm is helping here. So the spread between canola and palm has gotten really, really big here, right? Like canola is way below, $1 below this range low that we were in. Palm oil is still arguably holding up or just testing into the low end of that range still. Like we're still oversold. Don't get me wrong, this market could come down. We could break below, this low here, this September low that we had made in all of these charts, right? Soybean oil is basically down to that September low right now. Palm oil is still quite a ways from that September low. Rapeseed or canola is way below that September low, right? But I think that there is, the idea that if we start to see the most bearish of these markets start to show some signs of life, right? If it starts to flip the script, if we can confirm that with a flip and a move higher here off of support for, palm oil. If bean oil also down into this supportive area, which when you look at a continuous chart of bean oil, you can see how this area has been supportive going back to 2021 down to this 50 handle. Could we run stops below, what have you? Sure. But I think we're closer to support now than not, and I feel like we need to go back up to test resistance. Now, building the bear case here, when we look at soy oil, this is not a great looking chart. This is a chart that's turning parabolically lower. We're just going back into oversold territory as well. We tested old broken support as resistance, right? This upward sloping trend line. This 18-day moving average, we fell below. We held it as resistance. This looks like a trend lower for all intents and purposes, but I don't believe it'll take very much to reverse what we're seeing and the damage we've seen on these charts either. And, what I'm proposing here is, since we're not going to really trade palm oil, or at least I don't know many of you that would, seeing reversals in palm oil and canola could be a great reason to hop into soy oil, right? Waiting for that confirmation across the whole spectrum here, because they all seem to be rolling over and breaking support together, right? So we need to be thinking about the bearish trend right now and watching how the bearish trend's unfolding in all of these until eventually it doesn't, right? Which I think, a price action like today for canola is worth pointing out that this could start something if the reversal continues, right? We need to see it back above the highs of the day around 631 to 740, then move back towards the 18-day moving averages on the table. And that's quite a ways for this market for right now. Palm oil, we would want to see this kind of, this break below this 3,700, 3733 low area. We want to see us get back above yesterday's high. Get back to 3,800 on palm oil. That would suggest a buying, outside day reversal higher, key reversal setup there. Which means soy oil would very likely be finding some kind of bottom at the same time. And for soy oil now, I'm going to want to see this market get back above 53.83, this old low that we're, dangerously flirting with below. All of these levels that now we're down to extremes and pushing through some levels, I want to see it look like a head fake, right? I want to see it rally back above the levels we broke through, head faking this market, making you feel like, oh, it's a gotcha setup. And all along, right, we can look to actual crude oil as a final, confirming indicator for all of these markets, and maybe the leading indicator in the near term for why some of these biofuel, commodities will bottom is if crude bottoms and gets back above 72, 74, 76. Now we're talking, right? A reason for the biofuel demand and a reason for some of the excitement that was going on behind our oil seeds, comes back. So I'm cautiously optimistic that we are getting closer, right, to a bottom in those markets. It's still a falling knife, and it's not something I'm willing to say, right now a bottom is completely in. But I definitely think the price action in the last 24 hours now is starting to suggest, hey, I think we're closer to support. That oversold nature in this market is starting to get overdone. And I'm going to be watching, the most oversold of all three biofuel products here. Canola now is way down there. And yes, canola is now on par with soy oil and others for use in biofuel blending. So, they're all interchangeable commodities for all intents and purposes. So their pricing really comes down to the underlying supply of each, right? Because they're, and of course the cost to get them to their end market. So watching for that reversal here today through yesterday's highs for canola, palm oil, same thing, getting through yesterday's highs for that reversal. And hey, soy oil, even just through today's high, I think would do a lot to reverse, what has happened on that chart. Thanks for joining me for this strategy of the day update. Feel free to join me later today at 1:30 p.m. Central for the strategy of the week's webinar. Sign up to be part of that and to get the link to that webinar as well as a link to its recording if you can't make it to the live session in the comment section and information section of this video. Leave your likes and your comments below. Thanks for joining me. I'm Dan Hussey with Zaner Ag Hedge. You can reach me at 312-277-0110 over here at Zaner. Find me on Twitter, Facebook, or shoot me an email at dhussey@zaner.com. Have a great day, everybody. We'll be back with you as price action develops. Take care, everyone.